Greetings to all. This is Neel Parekh, Technical Research Associate at GEPL Capital. Welcome to this weekly market outlook video. In this video, we are going to talk about the Nifty and Bank Nifty current market chart structure, and as well as we'll discuss the two stocks which has a high potential to outperform in the upcoming sessions. So without any further ado, let's start with the video. So this is the Nifty 50 weekly time frame chart. If you look at on the weekly scale, the Nifty has closed near to its 26,046 mark, which is near to prior weekly sessions high. And on the weekly scale, index has formed a reversal pattern, which is called as a shooting star pattern, which is a single candlestick pattern, which holds a potential to reverse the upward trend. So similar pattern has been observed on historically on the previous series as well. If you look at on the October series index has formed a similar pattern on 31st October, and on the preceding week has showcased a strong selling pressure of near to 400 to 560 points downfall. So if we look at gradually Nifty has started its August upward trend from the August series, and during this phase Nifty has formed a two shooting star candlestick, and similar pattern has been followed. After a shooting star candlestick, index has showcased some sort of a profit booking or a price wise correction of 2 to 3%. So if we look at for the preceding week, like for a upcoming weekly session, Nifty sentiment for the near term remains weak as it's showcasing a reversal pattern on the weekly scale. Zooming out on the daily scale, index has showcased a rejection from its 26,200 area mark, which is at max call open interest, where from the derivative standpoints, and as well as 26,220, which is the highest closing price of the previous September series, which is a previous yearly September series of 2024, which is at 26 to 20. So statistically, we are in the congestion zone at the moment, and at elevated levels, Nifty is getting hesitate to cross above this 26,200 level. So that collectively defines the near term remains weak for the Indian equities, but the broader constructive trend remains still on the positive front on weekly on the and the monthly basis. As on the monthly basis, on the October series, Nifty has witnessed a breakout of its cup and handle pattern. So constructive remains on mid-term to long-term view, but the near-term remains cautious sentiment for the short-term traders. At a lower scale, 25,850, 25,700 would be the strong support zone for the Nifty index from here onwards, and at a higher scale, 26 to 20 to the level of 26,325 would be the resistance zone for the Nifty index. So actionable setup for the Nifty for the near term would be sell Nifty below 25,950 for the target price of 25,800, and stop loss should maintain at the level of 2650 mark. Zooming out on the Bank Nifty front, the Bank Nifty has also getting rejection from its 26,000, 56,000, 59,600 range, and it is showcasing a reversal from its higher top formation, and it has formed a double top formation on the daily scale. If you look at on the weekly scale, index has been showcasing a congestion zone at the moment, and it's been closed below its 5-week exponential average. At the lower scale, 58,600 to 58,400 level would be the strong support base for the Bank Nifty index, and at a higher scale, 59,600 to 60,100 would be the strong resistance zone for the Nifty index now. Mhm. Stock to watch out for the bullish momentum for the day for the upcoming series would be first one would be Titan, as Titan has witnessed the breakout of its 2-year concession zone on the monthly scale, and on the weekly scale it is consistently forming a higher bottoms respecting its key rising trend line adjoined from its 2009 bottom level. So that defines the Titan remains constructive on higher time frames, and on the lower time frame as well. Stock has witnessed the breakout of its swing high of November 2025. So at the higher scale, 4,200 to 4,340 would be the target levels for the Titan stock with a stop loss to maintain at the level of 3,850 level. Second stock that we have shortlisted is from the mining industry, which is GMDC. So GMDC on the weekly scale has witnessed the polarity shift where the prior resistance of Jan 2024 has been acted as a strong support base at a current level, current weekly sessions, and on the current week index has stock has witnessed the breakout of its 4 weekly sessions high, and on a daily scale it has continued to sustain above its short-term moving average of 20 and 50-day exponential moving average. The breakout was led by the volume participation as well as the momentum indicator MACD is turned on the positive front. At a higher scale now, 640 to 700 would be the resistance, would be the target level for the GMDC stock. And in this case, we have to maintain the stop loss at 520 for the effective risk management. Now, if you look at the India VIX, which is a volatility index for the Indian equities, which is trading near to its multi-year lows. So what it defines is that market has been low participation on current sessions on the current market scenario is been led by the very low market participation. As a result, India VIX is at the lowest of its multi-year low. So that defines the index for the near term remains very cautious as the participation is very weak, and at a high scale we are getting multiple time resistance from the similar 26,200. So till then we are not sustaining about 26,200. The short covering rally push would not be able to gain on the near term. So till then market would be on the range bound surface. So that's it from my side. I hope you like the video. Do share and subscribe to GPL Capital's YouTube channel.